In this chapter, we'll be looking at how we audit the human resource management process. So let me get my book open to where it needs to be and have you go there as well. You want to go to page, there it is, 423 of your book. Now, specifically, we'll be looking at various items such as the human resource management process itself, what factors are involved, how payroll is determined, processed, and go through the various components of our audit with these processes in mind. So the human resource process starts with the establishment of sound policies. And that's very important that there's proper policies for hiring, training, evaluating, counseling, promoting, compensating, and taking remedial actions for employees. The main concern of the auditor involves payroll transactions once an employee has been hired. So in your book on page 424 is a picture of Earthware's flowchart for their human resource management. And there you could see that in the operating area specifically, that's where they initiate personnel changes, but it's actually human resource that is doing the hiring and turning their names over to the payroll for payroll input information, match up the employees with the with the timesheets that they prepare. And then the payroll will send off this information into the IT system for processing, where paychecks are created, the payroll register is recorded, and information ultimately gets into the general ledger. So take a good look through that to understand this process, and probably a normal process for a human resource management. So the types of transactions that we're focusing on here are payments to employees for services rendered and any accrual and payment of payroll-related liabilities such as Social Security and unemployment taxes. There's various documents that are and will be part of the process, but first let's take a look at the accounts that are involved. In the payroll transaction themselves, you have the cash account. You may have inventory involved if it's a manufacturing company. You need to worry about direct and indirect labor expense accounts and various payroll-related liabilities such as federal income taxes payable, Social Security payable, unemployment payable. When it comes to the accrued payroll liability, the cash account may be involved. There may be various accruals, even for employee benefits. And then there's the transactions, various accruals. The types of documents we'll be looking at are personnel records, W-4s, which are what an employee fills out to authorize federal income tax and at what amount it should be deducted from their paycheck. The employee's time cards or time sheets, their payroll check themselves or direct deposit records, payroll register where they're all of the paychecks are ultimately listed, payroll master file, which is in the IT area, any kind of change reports to the payroll master file, periodic payroll reports, and various tax reports and forms. So all of these items are included in our audit process. The major functions in a human resource management, well, there's human resources, and this is the department that is authorizing the hiring, firing, wage rates, salary adjustments, the salaries, and payroll deductions of the employees. There's supervision. They review and approve employees' attendance and time information because that is their direct boss. They monitor employees' scheduling, productivity, and payroll costs variances, so differences between what was expected and what actually occurred. Timekeeping. Timekeeping is the department that processes the employee's attendance and time information and codes it to the proper account distribution. And then payroll processing, which is usually done through IT, the computation of gross pay, deductions, and net pay, recording and summarizing these payments and verifications of account distributions. The actual disbursement is the payment of the employee's compensation and benefits. And then there's the general ledger function, which makes sure we properly accumulate, classify, and summarize payroll information in the general ledger. So there's different functions within the payroll application itself. So you should be familiar with these. When it comes to segregating duties, it's very important to do that. One of the top ways of committing fraud in this area is paying people too much money or having ghost employees. So we want to make sure that these functions are separated so that this could be alleviated. The initiation of wage or salary changes is usually done in the operating or supporting area, so it's the boss. Hiring and firing is usually done with the boss. Approval of wage or salary changes, human resources, and updating the personnel records and payroll records. Approval of timesheets is usually the boss. Keep that separated from the review of time data and payroll distribution. That'll stop any ghost employees from appearing. And preparing the journal entry should be completed between payroll and IT. Continuing, preparation and signing of the payrolls should be done by the IT, but distribution should be done by the treasurer, someone separate. Updating the general ledger will happen within IT. Doing some comparison between actual and budget will be done by the managers of each department. Calculating and recording payroll taxes done by the payroll department. So these are some focuses, some major segregations we want to make sure occur so that one person doesn't have too much power in that payroll area. So then we go on to our audit. First thing we do, as always, is assess the inherent risk of the payroll. So the auditor may want to consider the effect of economic conditions on payroll costs, what kind of supply of skilled workers there are, that's an inherent risk, how much frequency there is with employee turnover. The auditor should be familiar with any existing labor contracts and the impact of regulations on the company. So the inherent risk associated with non-officers of the company is generally low, but it is the officers where there's more risk because they could take advantage of things in their high position. And there's a great article about Dennis Kozlowski on page 430. You should take a read through that. The CEO of Tyco and how he took advantage of his position. Once we assess the inherent risk, then we move on to our control risk. So we want to understand and document the company's human management process based on reliance strategy. We want to plan and perform our test of controls and then set and document the control risk for the human resource management process, just like we do for all of the other processes. The typical control activities and test of controls. Remember, a couple key things we want to make sure of. On page 432 is a great table showing these all together. To prove our assertion of occurrence, the auditor wants assurance that payments for payroll-related services are being made to valid employees for time when they actually worked. Controls must be in place to ensure that no payments are made to fictitious employees, and payments to valid employees are stopped once the employee is terminated. So, on page 432, some possible misstatements of occurrence. Payments are made to fictitious employees. How do you prevent that? A control activity would be a segregation of duty, and then we observe and evaluate proper segregation of duties. Payments made to terminated employees. The control activity that they maintain adequate personnel files. They have a process there. We may review and test personnel files. Payments made to valid employees who have not worked. So we're looking at an activity is initiation of changes in employment status are being made when the person leaves the company. And then we would review and test entities' procedures for changing employees' records to make sure that type of stuff is happening. Authorization of payroll transactions. The entity must have controls for hiring and terminating employees, setting pay rates, making withholding, awarding benefits, and issuing paychecks. So we may want to review and test their authorization procedures for each of those points. Accuracy. The auditor's main concern is that the employee's gross pay and payroll deductions are being determined correctly. So we would review and test the entity's verification procedures. If these are IT prepared checks, we want to make sure that they're being prepared correctly. Classifications. If I want to determine if payroll expense is charged to the wrong accounts, the financial statements may be misstated if that occurs. If it's not classified between direct and indirect labor, inventory and cost of goods sold may be valued improperly. So it's very important we test these. We would review the chart of accounts and review and test procedures for classifying these payroll costs. So once we look through at those assertions and feel and collect information, if the results of the test of controls for the payroll system support the planned level of control risk, the auditor conducts substantive procedures of payroll related accounts at the assessed level. If the tests do not support, the nature and extent of substantive testing will be increased, as always. That is how it works, right? We determine our inherent risk, we look at our control risk. Once we assess our control through tests, we then either modify or keep our control risk where it's at. Now we can look at substantive analytical procedures to see, are there any accounts that are really out of whack? So some payroll expense accounts can be compared to the prior year, such as payroll expense, wages, taxes. Your current and prior year's payroll costs can be calculated as a percentage of sales. Compare labor utilization rates and statistics with the industry data. Estimate sales commissions with formulas and recorded sales to see, is there any area we have to do more testing. Then we want to complete a test of detail of transactions. And in this process, we are looking for occurrence, completeness, authorization, accuracy, cutoff, and classification. So occurrence, a typical type of substantive test is to trace a sample of payroll checks to the master employee list to make sure that they're valid employees. Completeness, trace a sample of the timesheets to the payroll register. Did everybody who work get paid? Authorization, test a sample of paychecks for the proper authorization. Accuracy, recompute some of the payroll checks for gross pay deductions and net pay. Make sure that they're being computed correctly. Cutoff, trace a sample of the timesheets before and after the end of the year to the appropriate payroll report. Make sure they're being reported in the proper year. And then classifications. So we want to make sure that the payroll check information is being properly classified into the expense accounts by looking at a sample. When we're looking at the test of detail of account balances, so the first one was just looking at the transactions. Now we want to make sure, are the account balances good? Some assertions about account balances at the period end would be exists, there's a right and obligation, completeness, and they're valued and allocated correctly. And this is normal for any of our processes. So does it exist? A test of detail here would be vouch selected amounts from account schedules for accruals to supporting documents. So we want to make sure our accruals are proper. Do we have a right to call that a liability? So you want to review that supporting documentation. Is it complete? Are there any unrecorded liabilities related to payroll? And evaluation and allocation. So we want to obtain an account analysis schedule For accrued payroll liabilities, we want to make sure it's computed correctly, added correctly, compare amounts to the accrual in the information, compare the accrual to payroll tax returns that were created after the fact to support that accrual. And then finally, we want to look at test of detail of disclosures. The assertion about presentation and disclosure is their occurrence and rights and obligations. So we inquire about accruals to ensure they are properly disclosed. They're in there. Completeness. We complete the financial reporting checklist to ensure that all financial statement disclosures related to payroll expense have been made. Are all the notes that need to be explained, are they in the financial statements? We're going to review accrued payroll liabilities for proper short-term, long-term classification. And then for accuracy and valuation assertion, we want to review the benefit contracts for proper disclosure of pension and post-retirement benefits. Want to read footnotes and other information to ensure that information is accurate and properly presented at the proper amounts. So this is focused on the financial statements and the presentation and disclosure of the information. So on the top of page 435 is a list of these items. When it comes to our payroll expense accounts, we want to make sure payroll transactions affect many expense accounts, including direct and indirect manufacturing expense, G&A, sales, commissions, and payroll taxes. So if the entity's internal control is reliable, the auditor does not need to conduct detailed tests of all these payroll expense accounts. Additional testing is necessary only when control weaknesses exist. So if you go through the process of assessing your control risk and you feel pretty confident about your control risk, then your substantive testing does not have to be as in-depth as it would be if you felt there was weakness in the control system. The entity also incurs a number of liabilities. Remember, when it comes to payroll, there are taxes that are usually outstanding at the end of the year that have not been paid, such as federal and state income taxes and FICA. There may be benefits that are not paid, such as premiums for medical and life insurance, pensions. So we want to make sure we pay attention to these accrued liabilities, make sure they're all recorded. So some examples of these accounts are accrued wages, accrued benefits, accrued payroll taxes, accrued commissions, and accrued bonuses. So not only are we looking at expense accounts, which are very important, we also need to look at corresponding liabilities related to payroll. When we are looking at these, we have to worry about cutoff. And as we said, an examination of supporting documents for the accrual will provide evidence that this is properly being recorded in the accounting period it should, with respect to the liability and the expense. Existence and evaluation can be proved by verifying the existence and evaluation of that accrued payroll liability. The auditor can trace the amounts included on the account analysis working paper to supporting documentation, such as a payroll tax report. So there's an independent verification. That's a formal document, like a tax return. Is it complete? Are the accrued payroll liabilities complete? The auditor has to be aware of the normal payroll-related taxes that are paid by the entity, and there should be able to tell if everything is there. And then on the presentation and disclosures of accrued payroll liabilities, some of the items that should be completed or all of them are there, but here's some of them, like pension benefits, post-retirement benefits. Are there notes present discussing these items? Stock-based compensation, profit-sharing plans, deferred compensation arrangements. So companies should have these information about these payroll-related items right on their financial statements. It's required. Once the audit process is complete, we now have to evaluate the findings. So if the likely misstatement is less than the tolerable misstatement, the auditor may accept the accounts as fairly presented. If it's greater than the tolerable misstatement, of course, as always, the auditor must conclude that the accounts are not fairly presented. And from there, discussion would be made with the company about how they will correct that. In the advanced model, in share-based compensation, and this is something that people, as an auditor, you will come about. A lot of times companies sell or pay in stock options. And stock options are just giving the employee the opportunity to buy stock at a lower price than the market. And it's considered compensation because they can buy it at a lower price and then sell it. And the difference between that is usually the compensation. When we are reporting this in accounting, though, and we're auditing share-based compensation, we have to be aware of how the salary expense is determined related to those stock options. So a lot of times companies use what's called the Black-Scholes-Merton and binomial model to determine the compensation expense that should be recorded. And involved in that are the exercise price of the option. So that is the amount that the employee can buy the stock at, the term of the option, how long do they have, the current market price, how they expect the stock price to change, the volatility of it, any expected dividends, any expected risk-free rate. So these items are all taken into account in this model to determine the compensation value that should be included in the financial statements. My slideshow ended, so I added another slide in. And just to bring to your attention, the bottom of page 440, they talk about the auditor must get a general sense of how share-based compensation is used by the company, and they should perform some auditing procedures, read all applicable share-based plans, and ask management about documents that could give you relevant information, understand policies, processes, and controls with regards to these share-based compensation, meaning the employees getting stock in place of money as compensation. Test and design operating effectiveness of controls related to them. Have they been properly authorized? Obtain and verify the accuracy of schedules supporting the granting of share-based compensation, review board minutes, perform analytical procedures, and determine if any awards were exercised for other than cash. Okay, so there is some auditing techniques used to audit these special types of share-based compensation. So that's kind of a weird thing that could happen within the payroll and the human resource management process itself that could affect our audit. So this was a short chapter, but a lot of information. So please take a good read through it, look through it. If you have any questions, please let me know.